This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. Yes, another Fed meeting that went as expected, with the central bank holding firm for now in terms of interest rates, but they did, Tim, ratchet down expectations for rate cuts. We also had the UN General Assembly in session, coinciding with New York City's annual Climate Week summit, and that gave us a really great chance to tap into some unique leaders on sustainability, including Energy Impact Partners founder Hans Kobler and Cisco's Chief People Policy and Purpose Officer, Fran Kasutis. We'll hear more from both this hour.
We mentioned UNGA in session this week. That's the UN General Assembly. A notable absence was Chinese President Xi Jinping. China continues to dominate the headlines in 2023 with concerns about its economy, its outsized contribution to global emissions, and those lingering tensions with the U.S.
First up on our program, legendary short seller and longtime China bear, Jim Chanos. He is someone who raised concerns about China's ghost cities years ago. We were always talking to him about it. And even as the country's central bank says it has sufficient policy space to support an economic recovery, Chanos remains a bit skeptical.
Bloomberg's Simone Foxman and I welcomed Chanos to our studios a bit earlier this month, and we began with his apprehension over the world's second largest economy.
Pleased to bring in our next guest, Jim Chanos. He's the founder of Chanos and Company. Thanks so much for joining us. He's in studio, our Interactive Brokers studio. He says China's on a treadmill to hell. And shared those concerns with the House of Representatives Select Committee on the Chinese Communist Party this week. Talk to me about the hearing. You know, were you able to kind of get a sense of whether or not, and I know you weren't there physically in person, but you did offer your insight. Were you able to get a sense on what the committee's doing? Are they going to be successful? Are they going to do anything, in fact?
That's above my pay grade, and thanks for having me, as to the politics in Washington, and I do think that the committee is doing good work in calling attention to these issues. And we've been pretty negative on China now for a better part of 13 years, and I think that the risks that China poses have morphed from purely financial to now beyond that into the political realm and the national security realm, and I think that makes this a bigger story, and the economic model risks as to how China sort of deals with those may in fact affect the politics.
Does the contagion spread beyond what I think most people are expecting at this point?
The good news is that the risks to the real estate market and the economic model do not have a lot of direct contagion risk to Western banks, and particularly American banks. Where the risks are in our equity and debt investments that various funds hold, pension funds hold, retail investors hold, and I think that's the bigger issue as opposed to a 2008 type transmission from their real estate bubble bursting to everyone's real estate bubble bursting. They can keep that internal, but it's a big problem.
What are the threats beyond an economic collapse or a property collapse in China? I'm talking geopolitical threats, national security threats. Yeah. What's the stuff that keeps you up at night?
Well, the morphing from spending on the additional high-speed rail link that's unprofitable, or the next apartment building, and putting up and basically building another aircraft carrier. The classic 1930s scenario where a number of countries, ramped up their defense spending as a way to stimulate, and we know how that ended. And so I think that we saw reports even today, I mentioned it earlier, that Chinese defense spending may be a lot greater than we think, as high as 4% of GDP. The U.S. is 3% of GDP. So they are spending more money. It used to be directed internally with internal security systems and that, but increasingly now it's hard to miss that it's also external with the Blue Water Navy and increased tensions around Taiwan.
Well, let's talk about that. I mean, how much of a concern do you think that is right now, an invasion of Taiwan?
Well, as I said earlier, I think the real risk is something happens, right? An incident that's unexpected, right? You have now ships transversing, crossing each other's bows. You have a lot of aircraft in the area, and all we need is someone, a pilot, to make a mistake or get scared or a mishap of somewhat, and then you have an international incident, and that's, I think, as the temperature kind of rises in the South China Sea, I think that's the real risk, as opposed to a premeditated, attack on a Western country or Western ally.
So you want to short China potentially?
Well, we've been short China for years. Paradoxically, we're less short China now than we were 10, 12 years ago, because China has gone nowhere. I mean, the stock market has basically been flat for 12 years. And as every other stock market has tripled or quadrupled. So it's been a very poor place for Western investors to park their money for years, not just for the last 12 years, but really for the last 20 years. And I think that's going to continue to be the case, broadly speaking. China does not treat Western capital very well.
How are you betting against China right now?
We have some direct shorts in the financial area. We have some indirect shorts that depend on China for a fair amount of their revenues. But as I said, our direct shorts are probably no more than 4 or 5, 6% of our portfolio. In 2010 and 11, it was above 20%.
We've spent a lot of time over the past few months talking about the struggles of the Chinese economy and the data that we get, or the lack thereof of data that we get, Jim. What evidence do you have that the Chinese economy is actually worse than what Beijing says or what markets already believe?
The funny thing is that if you have an investment-driven economic model, which they do, the GDP is actually accurate. I noticed something over the weekend that Michael Pettis pointed out, that in an investment-driven model, GDP growth is actually an input. It's not the residual, which I think is a really interesting observation. That is, I've always joked that China's the only major developed economy that knows its annual GDP on January 1 of that year.
I saw that in your tweet.
And so whatever the numbers needs to be, they will put enough stimulus in terms of new investment to hit that number, give or take. So I don't quibble with the actual numbers they're putting out, but it's the quality of the numbers, if you will. That if you never write off bad investments, the actual costs to GDP are sitting in your banking system in terms of bad debts. And you have to either inflate that away or recapitalize your banking system. And so that's the nexus of this economic model with economic growth. And it's a banking issue, ultimately. And so I think that's where I worry, that as long as the banks never write off the bad debts, that's where the quality, if you will, of disclosure is poor.
The ARM IPO, your thoughts on the valuation?
It seems a bit high.
It's a bit high. Are you not convinced by the AI craze?
I think it's 120 times earnings, and I think revenues are $2.5 billion, and went out at a $60 billion valuation.
And 25% of its revenues come from China.
Yeah, so almost 25 times revenue seems a little steep, but what do I know?
Are you going to short it?
Well, you can't yet, so it's a limited float, and but I'm sure at some point we'll crack open the prospectus.
Have you been thinking about shorting NVIDIA?
No.
Don't get in the way of the.
We have things that are perceived as AI plays that are trading much more expensive than NVIDIA does. So no need to go after the OG.
What kind of opportunities has this opened up as someone who looks at the market with a very critical eye?
Well, I think anytime we see one of these tectonic shifts in new technology, like the internet in the 90s, people at first embrace everything. Everything is going to benefit. But what you find out, of course, is that when it's truly a major shift, is that those technologies end up harming as many businesses as they create. And so if you think about the companies that were in the business of distributing analog physical products that became digitized, they went away. Blockbuster Video, Eastman Kodak. I mean, companies like that, record stores. I mean, and I suspect that if AI is as big as most people think it will be, you will see lots of businesses that had moats find out that the moats have been breached. So your software as a service, what prevents a corporation from having AI design its own software for various different applications, right? And there's lots of things that suddenly you don't think about. I kind of joked a little bit a few months ago when IBM's CEO came out and said that AI may make some of the IBM workforce redundant. And I joked, well, what happens when the clients find that same thing out?
Yeah, that's a really good point. I want to shift gears a little bit and talk about your strategy around shorting and what you're seeing in the market today. I think a lot of people, of course, understand your history with being a fraud hunter and going after companies like Enron in the past. I'm wondering if over the last few decades, with regulatory changes, you've seen fraud reduced, or are there increased instances of potential fraud out there?
I've called this the golden age of fraud. I think there's more fraud in the financial markets now than there has ever been.
Why?
And I teach a course on the history of financial market fraud. So the cycles go back to the late 17th century. I think that it always changes, but what really has me bothered now is that a lot of it hides in plain sight in the way in which companies report their business and their metrics. So prior to say 10 years ago, you really had to sort of, if a company was making unusual changes to its earnings statements, they would have to explain it away. And nowadays, adjusted earnings are basically the norm. And companies add back all kinds of things that they don't really
it is a little wild.
Care expense. Oh, it's amazing. Coinbase, in the fourth quarter of last year, I think share-based comp was almost 80% of revenues, and they just added it back.
I mean,
and so it's
we go back to the why WeWork didn't go public the first time.
Yeah.
Community-adjusted EBITDA.
Yeah, that was
at this point it's a joke, but then it wasn't a joke.
I know, and investors lost a lot of money, and the SEC, promised kind of a crackdown on this a number of years ago. They admonished companies, as I recall, to not lead with these kinds of results. But I mean, for God's sakes, General Electric in the first quarter had 16 pages of adjustments on its earnings release. I mean, it's really, and companies that just take restructuring charges annually. Every year they take a restructuring charge. Well, if you take it every year, it's recurring. And I think that in Silicon Valley is in particular, pretty bad at this, where companies that lose hundreds of millions of dollars every quarter are reporting, break-even adjusted profits. And so you just wonder if they're really businesses or are they executive enrichment schemes?
Question mark for you. Although this is the golden age of fraud, activist activity has dropped by 85% since it hit a peak in 2015. These are numbers from Direct Market Intelligence. Yeah, it answered the question I posed just before the break. I mean, is the era of the short seller behind us?
I think everybody asks that during every bull market. 1999 and early 2000, it was the same sort of question. Will short selling ever work? And it's sort of the corollary: does value investing ever work again? When people pay higher and higher prices for questionable corporate assets. And the question is generally, it comes back, and businesses generally find their true value over time. I mean, just look at the meme stock, run up and now disaster from 2021 to today, and there was no price too high to pay for some of these stocks because they had a short position. And ultimately, most of them have come crashing down to earth.
We'll get back to that specific one in a second. But first, I want to ask about the, rising short seller in the market right now, Nate Anderson at Hindenburg. He's been big bets against Adani, or rather, he's said very public negative things about Adani, Icahn Enterprises. Do you see eye to eye with some of the calls that he's made?
Look, I think Nate and Hindenburg have done great work on a number of names, Nicola and others, and you'd be wise to at least hear what they have to say, even if you don't agree with it. if it's well researched, and like anything, stock prices are opinions based on facts. And so at the end of the day, it's essential for a marketplace, whether they're positive facts or negative facts. And if you're a good investor, it behooves you to basically hear both sides of any story.
We'd be remiss if I didn't ask for an update from you on Tesla. Shares up 124% this year.
Yeah, we are short Tesla. We remain short. It's one of our 44 positions that we have. Look, Tesla is in many ways, I think, epitomizes this bull market. It's a hopes and dreams stock. It's trading at 75 times earnings, which aren't growing anymore. It looks like revenues are going to be challenged in terms of growth. So it's now, again, an AI story or a robo-taxi story or a battery story or a robotics story. It's whatever you want it to be. And it reminds me a lot of Cisco back in 1999 and 2000, wow, where Cisco was a networking company. Tesla is a car company, but Cisco was going to get into everything else that had anything to do with the internet. And people put a higher and higher multiple on it. And ultimately, Cisco did okay, but the stock price, dropped 90%.
I'm going to do a quick lightning round of some stuff that has been reported that you are or have been short recently. Just have me yes or no's if you're still short. Digital Realty Trust?
We are short the data centers.
SL Green Realty?
SL Green is, we are short commercial real estate.
Okay. Tesla, you said. Sunrun, you said.
The solar leasing companies, I've called them science projects. They're absolutely hysterical. They lose hundreds of millions of dollars, huge negative free cash flow. And getting back to our early conversation about metrics, they report rather than a regular P&L, which would be embarrassing, they report these net present value calculations based on the panels they put up on people's roofs, and it's absolutely hilarious the way they do it. And I think investors are going to find out the hard way about it.
All right, Jim, we're going to spend the last 40 seconds with you getting your thoughts on what you're watching, what you're streaming, what you're doing, and what you're seeing at the movie theater. New movie out, Dumb Money. It's got Pete Davidson in it. It's got Seth Rogen in it. Are you going to see it? Have you seen it? It's all about meme stocks.
I told one of your colleagues earlier, I don't see the need since I live Dumb Money 5 days a week in the marketplace. So at some point, I'm sure I'll see it. I think it celebrates the meme stock investors winning over Wall Street and the evil hedge funds. The sad thing is that most of those meme stock investors have lost large amounts of money, chasing these ideas, because, as we pointed out, a lot of these companies came crashing down to earth, and in some cases have already gone bankrupt.
Hey, Jim, really appreciate you taking the time and joining us, especially for such a long period of time. Jim Chanos, the founder of Chanos and Company, legendary short seller here in our Bloomberg Interactive Brokers studio.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
UN Week, Climate Week, Global Citizen coming up this weekend. There's a lot going on in and around New York City right now. There's a lot going on for companies too, which with the UN and all of this, though, here in New York City specifically, it means a lot of global leaders come here and we get to check in with them, among them Fran Kasudas. She's Executive Vice President and Chief People Policy Purpose Officer at Cisco Systems. Delighted to have her back here in our Bloomberg Interactive Broker studio. Hello, how are you?
Good. It's great to be with you again.
It's great to have you here. We have a nice chunk of time, but I want to start with, because as I always like to do, because you are, front seat with what's going on at the company and what's going on in the environment. How would you describe? You've seen you've been at Cisco 27 years?
That's correct. Yep.
It's amazing. You've seen a lot of different business cycles, and you've seen the technology world change and different cycles there. How would you describe today's environment?
I would say it's incredibly dynamic. I think that our customers view technology a little differently than they did, I would say, even 3 or 4 years ago. I think there's an understanding that digitization and technology is an enabler for their success. And as a result of that, I think it changes a lot of the conversations that we're having with our customers. Even a good example of that is on the sustainability front. Mm-hmm. Whereas I think I would say 5 years ago, our customers were looking at the checklist, like what do they need to do from a regulation perspective and what they believed was coming. I think now there's some really good discussions around how does sustainability intersect either with their business, their technology, what they're doing, what is the opportunity in that. And I think as a result of that, a lot of the conversations that we're having about whether it's modernizing infrastructure or security has a little bit of a longer tail than it did once before.
That's interesting. Is it a good business environment, though?
I think it
What's the right word? What's the right adjective to use?
I think dynamic, to be honest.
But what is dynamic? Because dynamic to me sounds upbeat.
Yeah, I think it is upbeat in that technology is front and center. I think our customers are coming to us and we're coming to them to figure out solutions. And I think as long as we're having those conversations, it makes us better. I think there are a lot of dynamics that businesses are responding to that I wouldn't put in the positive category.
What are some of those?
So, it's everything from the fact that we still have a war on the ground in Europe. I think leaders are still trying to figure out how they want to work. I was in a meeting earlier today, and I will tell you there was not a lot of love for what I would consider hybrid work. I think leaders are trying to figure out what's the right way to work. My people want something a little bit different than I do. That's an interesting dynamic as well.
Describe that when you say there's not a lot of love. What were you hearing?
I think what I hear, and it's understandable, is that in some cases, I think leaders want to go back to something that was a bit more predictable, right? So we would all come in 3 or 4 days a week, and we would do our jobs.
5 days a week,
or 5 or 6 days
back
a week.
in
Absolutely.
the 2019s.
And what's interesting is that I think from a business perspective, it would be so much easier if there was a one-size-fits-all, but the truth of the matter with work is that depending on your job, depending on where you work, who you work with, there's so many different flavors. And I think that's an example of a dynamic that leaders are having to deal with and really think through what makes the most sense.
Fran, what would you tell leaders? Because, and correct me if I'm wrong, but Cisco's been doing hybrid and people have a lot of flexibility for pre-pandemic for years. So what would you tell leaders about what works, what doesn't, why it makes sense, what would you say?
I would tell leaders to focus on the work, because I think work will guide on how we need to come together. But I would also tell leaders that I think all of us are now event planners, because I think we have to think about the events that bring our teams together, that build the culture that we need to have to ensure that we have the connections that we need. But I don't think it's a one-size-fits-all. I actually don't think that whatever we create this month may be applicable next month. I think there's just a tad bit more agility in how we work. And as leaders, I think we have to work hard to really understand what does success look like, and do I have key measures that allow me to understand whether or not my teams are doing what we need them to do.
Has it helped you in terms of finding workers? And I'm very curious what you have to say about the labor market. We're seeing signs of some softening, but I'm just curious how being flexible helps you, and then what you are seeing overall in terms of the labor market.
It can help you, but you have to be really deliberate with what you want that team environment to look like. So as an example, there are some of our areas from a technology perspective where we want the best of the best, and we're happy with wherever they are in the world. And we have the technology for them to join us via video. And so we don't worry about the fact that they may be remote from other members of the team. But that's a deliberate choice. But I think when you have a level of flexibility, it's just going to allow you to cast a wider net on who you bring into the company.
How do you create those spontaneous moments that, those water cooler moments here at Bloomberg, those pantry moments? I mean, Joel Weber, our editor of Bloomberg Businessweek, tells us every week that
that's how
some article, even a cover story, is the result of just bumping into one of the reporters in the pantry.
Or strolling over to somebody's desk,
Exactly.
Right?
I think it takes work remotely. And this is the rub. I will tell you, this was a long time ago. I'm going to say 15 or 20 years ago. I remember I created something called the virtual hallway conversation, because I had a team that was all over the world. And we would schedule this 10-minute quick sync. And the only rule was we couldn't talk about work for the first few minutes. Because sometimes when we bump each other in the hallway, we just talk about how are your kids, what are you doing? Yeah. So I guess what I would say is we do have to work hard to create that. When you have flex, it doesn't mean that you don't come in. I think you just have to be really thoughtful when people come in. What is the best use of our time?
Would you say there's a little softening of the labor market?
You know, it's interesting. I would say that despite the fact that there is some softening, boy, the talent market is still hot in many, many areas. And I look at an area like security as an example.
Right.
Globally, the belief is still that there are 4 million security roles that are still open, and that we can't find the talent for those roles. The other thing that we understand is about half of those roles.
Would you say you have roles that are open that you...
I would say that we're always looking for amazing talent, but I think around the world, there's some struggle getting to people that have some of the skills. On the security side, about half of those roles are more entry level. And so for us, what that means is there's such an opportunity to train up talent and really help them get the skills that get them started.
How do you train up that talent earlier in their careers, earlier in their lives? I mean, where does this start within our education system?
It's interesting because if you look at the U.S., President Biden, I think about 9 months ago, convened a group of leaders together against the backdrop of security. And the approach that the team was taking was to look at what are the security skills that everyone needs to have? What are the security skills that only many need to have, and then a few? Right. And so when you get to the few, you are talking about your chief security officers, the top of the top. But for all, what you're talking about is maybe we need to start to teach our students in elementary school about passwords and how to be secure. And so
Absolutely.
I think it could start really early, to be honest. And then I think the other thing that I would say is when I look at Cisco and other tech companies, we used to spend a lot of time at, high schools. And now we're taking that down to elementary school as well. So I do think we need to start earlier, and especially for girls.
That is fascinating. Hey, listen, we've got about a minute and a half left here. You guys at Cisco, you've had ESG initiatives and missions and goals for a long time. Remind us a little bit about the impact that has had on the company financially and just overall in terms of the cultural environment.
The impact is significant. So it was about 3 years ago that we created our new purpose to power an inclusive future for all. And that really started to guide everything that we do across the company. From a sustainability perspective, we launched about a year ago our net zero goals for Scope 1 and Scope 2, which is 2025, Scope 3, which is 2040. We now have an SBTI approved plan, which basically means that we have a scientific plan that has been reviewed and approved. I say all of this because I think that inclusive future means we need to have a livable planet. That inclusive future means we need to have really good people practices within the company and to influence communities more broadly, and that we're doing everything we can from a digital divide perspective. I do think, Carol, that how we focus on sustainability will be an amazing business for Cisco too. So as an example, some of our technology now is so much more energy efficient with higher bandwidth, like our Silicon One products. And that's a great growth business for us, but it's going to save our customers a ton of energy on the other side. And that's the opportunity.
Well, and I do think about when you've got the hottest year on record, like how that kind of shapes and whether that makes companies like yourself even rethink, is it sooner that you try to do this against? Do you think about maybe trying to get there even sooner?
We have to. And I think the technology and our people will push us to do that, which is great.
I know you're going to be involved in Global Citizen. You guys always are. I'm so grateful for you finding time for us. Thank you.
Thank you.
Fran Kasuda, she's Executive VP, Chief People, Policy, Purpose Officer at Cisco Systems here in studio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It's Climate Week in New York against the backdrop of the 78th session of the UN General Assembly. You know that we've been talking about it. The UN has identified 17 specific SDGs, Sustainable Development Goals, including building out resilient technology infrastructure. And to get there and reach some of those 17 SDGs, the UN has highlighted high-impact initiatives, among them unlocking the data dividend, which our next guest participated in an event that happened here this week. With us is Johannes Uting, Executive Head of the Partnership in Statistics for Development in the 21st Century. The acronym is Paris 21, which is hosted by the OECD UNCTAD in Paris. I have to say, though, Johannes, former member of the UN Secretary General's expert group on the data revolution. He's a development economist, expertise in employment, social protection, healthcare, financing, and gender. He's looked at the world in a lot of different ways, and we are delighted to have him here in our Bloomberg Interactive Brokers studio. Welcome, welcome.
Thank you very much for inviting me.
Well, thank you. And I've learned about Paris 21 because my daughter has done an internship with you all this summer, so full transparency. But I've learned a lot. Tell us, though, in your words, your mission and your goals, what you guys are all about.
Paris 21 stands for Partnership in Statistics in Development for the 21st Century. We basically do three things. We help countries with technical capacity development, national statistical offices. So we help training of managers in statistical offices in poor countries like Rwanda and others. So we organize trainings. We help with coordination in many parts of when you produce data. There are many ministries involved. There are development agencies involved, and we help them to get coordinated. And last but not least, we do advocacy. And you just mentioned the UNGA Week, the SDG Summit. And we do advocacy for more and better funding for data and statistics.
Well, what's interesting, in a world that's so overrun with data, we just assume it's good. No, we don't assume it's good. We talk about biased data and kind of dirty data, not great data. But not all data is good. Not all data is productive or useful, right? And so you guys are involved in that, in helping countries develop infrastructure so that they can actually accumulate their own data sets, correct?
Absolutely correct. Yeah. I think what is a bit difficult sometimes to understand is, on the one hand, we have a data tsunami. We have all these data, digital data, which is very good, which is feeding artificial intelligence and innovation. On the other hand, we have and on the other hand, we have data gaps. Terrible data gaps. In some countries, we don't even know of how many people in a country are living. We have difficulties to measure birth rates and to register those people. We have a lot of data gaps in the SDGs. We, in particular on climate change or gender equality, we are literally flying blind. Mm-hmm. So we are supporting as Paris 21 with our partners to close those data gaps, to be able to do better decisions, but also to hold our governments accountable. I think that's also a very important aspect of this, so that if you say you want to reduce poverty in a given country by X%, you want to have the start point and the end point, and you want to see if this is on track.
We've talked a lot this year about AI and the impact that AI is having on companies whose stocks are publicly traded. What about when it comes to your work and how you can use AI to make sense of this data and help these poorer countries actually make positive change? Are you using it?
An excellent question. I mean, what we see is that there are two, we often talk about silos, right? And this is a real silo. On the one hand, we have people talking about the data that you were just mentioning, feeding into the algorithms and that supporting these AI-driven innovation. And on the other hand, we have data for development, which is an own space by itself, and there's not enough crossover. If you look at the G20 statement, at the last one, there is a working group on data for development, and there's a working group on digital data. So there is yet not enough overlap. I think it's about to close, and artificial intelligence for the public good is, of course, very important. Mm-hmm. But also the quality of the data that you feed into it is essential. Garbage in, garbage out. Exactly.
So, I knew you were going to say that.
So the quality of the data to help countries produce verified quality statistics even is very essential, and often, unfortunately, not in the spotlight.
Well, you can't have transformative, I'm stealing words from you guys, but transformative policy without transformative data, correct?
Absolutely correct, yeah.
And I'm curious about, in a world where there's lots of stress points, I'm thinking, the hottest world, right? Hottest temperatures on record. So there's a lot going, or a lot of focus on climate. But investment in infrastructure systems so that the data collection is better. How tough is that to get the money going where it needs to go?
That's unfortunately, it's a very, very difficult exercise. So we currently spend around 600-700 million on data and statistics from official development aid, ODA aid. And this is less than a percentage point since years. So we would need to ramp up significantly the international support for data and statistics. But we also need to convince countries to invest part of their taxpayers' money, domestic resources, into it. And the payoff, the thing is, if I invest into a hospital, if you are a minister, what would you do? Would you invest in a hospital or in vaccination or education? Or would you invest in a national statistical office?
Right.
You would probably do the first,
yeah.
Because then you can
That's
show
right.
after 2-3 years it's done. these benefits for investment in national statistical systems will only take time. The benefit will take time 10, 15 years later. They feed into everything else.
Sell us on it. You know, if you're trying to sell a minister on making this investment, how do you do it?
What's the cost by not making those investments?
What we say is, if you want to have, for instance, economic growth, it's very critical to have a very good understanding about key economic indicators, right? And if those are not sort of measured in your country, you will not be able to, first of all, to make very good decisions. You will not invest your public resources very efficiently. You are not even able to tell you if you do it or not. So in that sense, we are not asking for a lot of money. It's peanuts. It's literally peanuts. And there are we have a lot of good tools at hand to help. So I think for a minister, and many planning ministers actually know this, and they are behind this. It's sometimes just the politics behind, which is a bit difficult.
No, politics, no. But what's interesting is
Not here in the U.S.
I think about the amount of investment decisions that are made up of like all of the U.S. economic statistics or global statistics right in the developed world. We've got about a minute and a half left. Johannes,
we got a lot of time.
Oh, we have a little bit more.
Worry.
Sorry. Oh, okay.
Yeah.
It's been that kind of crazy day. So I think about like our audience who's listening, a smart financial investment audience. What is it that they need to understand about, again, the importance of it and potentially the payoff? Or what's being missed by not accurately having data on a lot of different countries?
I think we have to talk about the opportunities and the investment opportunities. We will have next year in Medellin a World Data Forum.
Yeah.
So all your listeners, your community is cordially invited, because we are working more and more with the private sector, of course, with the big companies that have a lot of data. They make those data also because we were asking about AI. I will later today attend by Google an AI for public good. There are many other companies who are actively engaging. I think they could do a little bit more, though, and also sees it as a public good. So I think for the many of our colleagues and partners from the private sector are interested. So are civil society organizations, by the way. And to bring them together in multi-partnership, that's the partnership part, is very important.
How can we make the data collection easier from the perspective of these countries? And I'm thinking about public-private partnerships specifically. Think about the data that a mobile phone company has about what somebody does on their phone, transactions that they make. You can get really granular information that can tell stories about an economy. What's the role of a private company in working with a government to provide that data? Because there are some privacy concerns too.
It's on point, exactly how you say. On the one hand, we call this public-private partnership. And there are some really very nice public-private partnership out there where telephone companies share confidentially and secure the data. But of course, it's a business risk as well. And you have to see what has happened to this data and so on and so forth. But there are some very good, promising examples of how what we call big data, specifically on geospatial data, is used, for instance, on poverty mapping, day and night satellite imagery. So you can look at a given country and you can compare the light nights and you can compare it with a day, and then you can make a sort of calculation: do these people have light, electricity or not? And from this, with other data, you can estimate how poor people are, and you also know for your investors where maybe you can put some infrastructure to solve this problem.
And that's what I was thinking about. It was interesting. I was over at the Earthshot Prize, Bloomberg Philanthropies event, and we talked with some of the finalists of the Earthshot Prize, and they've come up with different ways to decarbonize the world. And one of the things, let's talk about what you're doing, but then it's like, what's the impact? Talk to us about some of either the data sets that you have helped accumulate and what it has led to. If you can give us some examples.
Of course. We do a lot of country work, and in specifically one area which is very important is on gender. Mm-hmm. So in some parts of this world, through our support in the Maldives, in Colombia, in Africa, in many countries, we have now more sex disaggregated data, which is fantastic for many different purposes. This
sounds
will help.
So basic, right? But
yeah, absolutely. To know of how many men and women there are, children. So we have quite a couple of countries where we can show success, where we can show impact, and this impact is leading governments also to invest more into data and statistics. So you can say the glass is maybe more half full than half empty in our area.
Yeah.
But through these events like what we have here at the highest level, that we had the DSG, Amina Mohamed was opening the High Impact Initiative. We had another event, just a breakfast on 7 a.m. in the morning, full room, very, very important people. So there is more consideration for the topic. And I'm rather optimistic then for the next 8 years that we can give it a big push, and we will be able to convince more people that this is an important part of the development nexus.
Johannes, you talked about Google and like the meeting that you've had, or the conversations you've had, and I do wonder about how much increasingly the private sector can play in all of this. It's interesting. We had a guest yesterday, and we talked about the Roaring 20s and the crash and FDR, and we talked about who were the power brokers back then. And it was, the Carnegies and those kind of folks who were industrialists. Today's power brokers are the data CEOs and the data companies. What you are trying to do, does it increasingly have to come from the private sector, or does that not necessarily give you the purest data that you want? I'm trying to think for the right word.
It's a very, very important question.
Because they have so much.
They have so much data, but of course data is also linked to power. And it has lots of questions about confidentiality. It's about the safe use of the data. And of course, these companies want to make business. What we are talking here is about a public good. So if you talk specifically about a specific subcategory like official statistics, I would say this should stay in the hand of governments. There are certain criteria, we have principles for how to produce those things. It's a public good. We don't know what happens to those data, but I think some of these data is just essential for the government, for private sector, for civil society as well,
right,
to see where a country stands. How is about the education system. So to leave this to the private sector, I don't think is a good idea. To have the private sector feed into those official statistics, that's a very different question. But we need to be on the same level playing field. And we just talked about the numbers. If you look at the budget of an official statistical office in a poor country and you compare it with any other private sector funding, it's very clear where how the power relationship is.
Will investor money not flow in if you don't have those data sets?
Well, to some extent,
I'm curious about the relationship.
Oh, absolutely. I mean, it's flowing in. But then we make in some countries where we this birth registration that I mentioned, death registration, this is terrible mistakes are possible, and also sort of investments that are not sort of leading to the estimated results. I mean, the middle class, for instance, you want to know as an investor, the middle class in India, is it 500 million? How big is it actually?
Do you always trust the data?
No. No, not at all. I mean, there is.
Was
there were. But there is also
without
people,
calling out individual countries specifically, or feel free to.
Yeah.
I mean, there are. We can talk about the past.
Even the developed markets, right? We question some of the U.S. statistics.
There are two examples that very well known. It's Greece and also Argentina at some point in the past, and there was about the inflation CPI. Which is very well documented. So the good thing is that there is a trusted community that would call out those misbehavior. There's also a misunderstanding sometimes. There is not one truth in the data. It's not truth. What's important is you make it very clear that you abide to statistical standards and that the data is sort of produced with a certain quality standards, and you make it very open. And then you can start this debate about it, which is really more fascinating than you sometimes tend to believe.
I know from my daughter that, because she's done work with you guys on gender. Why gender versus healthcare versus employment versus financing? Or how do you choose where you want to focus on? How does that, or is that determined by the money that comes in and somebody's interest, or how do you figure? Because there's so many probably different ways you could go.
Absolutely. I mean, the demand is immense.
Yeah.
I think many of the questions around gender are underpinning every other sector. If you look at development, we look often at sectors. We look at agriculture, we look at health, we look at education,
right,
and we try to improve all those sectors. And the SDGs have 17 different quote-unquote sectors. Gender is underpinning everything. I mean, in terms of if we invest in good investment in gender statistics, which could be, I mean, sex disaggregated data, but also access to gender-based violence, or which is important to document as well. So it's underpinning all other sectors. And what you also probably have talked about quite a lot in the show is about the economic benefit to use the potential of women's empowerment, in particular, for instance, to access to ownership rights of resources, land, credit, insurance.
Right.
So once you unlock this potential, once you have an opportunity and you know how many women have access to land and what kind of land and credit and education, this will help you to make targeted investment, and which helps for all other sectors. So it's a huge multiplier effect next to that's an intrinsic value that women and men should be treated equally.
Okay, what about when it comes to data collection and how different countries are collecting data? Are you seeing, in terms of developing countries that don't necessarily have the infrastructure built in, are you seeing them invest in technologies that are so-called leapfrogging technologies that allow them to sort of bypass the big infrastructure investments that were made in the past? And I'm thinking ways to provide internet to folks without wireline broadband, without actually digging holes, using satellites, being able to use data collection instead of launching satellites, use drones, for example.
This is happening, and I collected myself. When I did my master's thesis, I went to a couple of countries and collected data for my own thesis. So I was working with national statistical offices, and we had these paper forms. So you went with a paper form with a questionnaire, and you asked all these questions, and then you went back, and then you had to type it in. I have seen statistical office packed with lots of paper, and you can
simple.
imagine.
Sounds so quaint.
It looks like in your office more or less. Anyway, so so this is changing now using mobile phones.
Yeah.
And copies and different forms of basically collecting the data electronically. And this is happening even in poor countries. So there are, you said it very nicely, you said this leapfrogging is happening. I mean, we are not seeing, we also work at the OECD with, of course, rich country statistical offices. And you can really see the difference of how National Statistical Office, in particular in these middle income categories like Philippines, eventually Ghana, Colombia, how they jump over this and how they change the infrastructure, and through very different forms of using modern technologies. And this is really very, very nice to see.
Well, I know in our prep call I said you kind of opened up a window to something that we are not necessarily aware of, and we just take for granted that there's so much data everywhere. So this was really enlightening. Thank you so much.
Thank you so much.
Safe travels.
Pleasure to be here.
So enjoyed it. Johannes Juting, he's executive head of the Partnership in Statistics for Development in the 21st Century, aka Paris 21. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
This next voice is going to sound familiar because we caught up with him at the Milken Institute Global Conference earlier this year. So great to have back with us in studio Hans Kobler. He's founder and managing partner of Energy Impact Partners. They have about $3 billion in assets under management. They invest in clean energy technologies, and they help deploy them through partnerships with companies trying to decarbonize. He is in town for Climate Week, and as I said, he's here in our Bloomberg Interactive Broker studio. Nice to have you here with Tim and myself.
Great being here.
Welcome back. Come on closer to the mic because we want to make sure we can hear you. The energy transition. Let's start basic. How's it going?
It's going well. It's picking up momentum. We had the first year in history that more money was spent on the energy transition than on traditional energy, 1.1 trillion. So the momentum is building.
A tipping point?
It's a tipping point. But it's the beginning. It's the first inning of a long, long race. If you believe McKinsey and some forecasts, we will need $8-9 trillion a year, 150 trillion. That's 15 internets, or 1.5 times the global economy spent over the next few decades.
It's a lot.
That's a lot, and we may not get there, but we are taking it serious. So it's picking up momentum.
Well, one thing that I think about when it comes to the energy transition is the role of nuclear power. And here in the U.S., it's a really checkered history. It's a really checkered past. It's very expensive for us to build nuclear power plants. There are always cost overruns, and then you have the legacy of Fukushima, 3 Mile Island, and Chernobyl. What are your thoughts on nuclear?
I think so. We have a lot of corporate partners in our investor group. The Southern Company was the last one here to try to build a nuclear plant. They finally got them all online, which is great. We have EDF as an investor that had 55 in the country running, and half of them didn't work when they shut down the Russian gas. And TEPCO was an investor too. So nuclear, the clean energy transition is amazing, and a lot will be wind and solar, but you need the base load, and nuclear is still the best way to get to the baseload. So I think it's critical to keep that in the arsenal. I'm from Germany originally. I think you can tell the accent. Probably the greenest country that has most ambitions to go clean. They spend a ton on
but they're even
wind and
shutting down
solar,
their nuclear,
and they shut down, which is a stupid thing to do.
It's. Is this reversible?
Yeah, but it's hard. It's
saw
hard.
him
It's
pull it
hard.
off
Once
in
you shut down an
California.
industry, you have to build up the talent to build new nuclear plants. You can.
But I guess my
restart
question
the one in
is,
Germany.
can we transition to net zero without nuclear?
Right. How
Hard.
crucial is it?
Hard. The transition to net zero is not only converting what we have today, but to deal with the demand that we are facing. We have had a flat demand curve in this country for 20 years. We are now electrifying transportation. We are building data centers running on AI, where one Google search, where one AI search is taking about 50 to 100 times more power than a Google search. So you're talking about doubling the infrastructure that we built over 100 years. If Elon Musk is out there saying, no, whatever you calculate, it's going to be tripled. So you need a lot of electrons. And so there is not one solution for that. That means we have to use different tools in the toolkit to get there and get there a lot faster than we have been.
But Hans, can we do it, this energy transformation, without nuclear?
Yes, but I think it would be a lot cheaper if we did it with nuclear. And at the end of the day, we have to address something that we call in the industry trilemma. Everyone wants to go clean, but when you face not having power at all, security, reliability gets on the horizon. And when the Germans pay 12 times more for natural gas than the Americans and 4 times more for electricity, then affordability comes in, right? So that's an equation.
But
this trilemma is an equation very difficult to solve.
But also motivation perhaps to invest in renewable sources that in the long run are less expensive.
Absolutely. But in a way, in our view, the only way to solve that equation of this trilemma is to apply innovation. That means you need new technologies, great technologies, and you need to collaborate. You need to involve the incumbents, the existing infrastructure sit on trillions of dollars of investments that we have to help them get there faster. That's, by the way, is the business model that we have, where we team up with corporates and bring them together in a room with the innovators and the capital to forge those alliances to accelerate that transition. Look, everybody wants to see the rosy sky, but you got to be pragmatic about it, and that means we got to work together and work faster and harder than we have in the past.
So when you have those conversations and those collaborations, what is it that you speak most about? Tim brought up nuclear, right? And we feel like it's become such a no-no. Is it nuclear? Is it hydro? Is it solar? Is it EV? Like, what is it that you guys spend a lot of time talking about with your partners?
Yeah. Yes.
Check.
Yes. So it is a complex undertaking. We need to decarbonize supply. We need to create a lot more supply. So that's one focus area. The second one is we need to create sustainable demand. That means electrifying a lot of the industries, from transportation to home heating to the data centers, indoor agriculture. And then you have to deal with the high intermittency you create. So I was just telling you, it's 2 to 3 times more power that we need, but at its peak, it could be 5 times as much. It's like building a church for Easter Sunday, and somehow we have to balance that. And that means you have to invest in transmission distribution, which is very difficult, right? It took 15 years to get the clean electrons from Canada through 2 of the greenest states to New York, because nobody wants to build anything in their backyard.
Right.
You build storage, and great technologies are coming up. We're an investor in Form, we're an investor in Power. And so by that, it's a lot of space that is needed, and it takes some time. Or you digitize the communication between the customer and the supplier, and you tell them, look, don't charge your car at 6 o'clock, do it at midnight.
Right.
Turn down, it's nice and cool in here,
and
just don't cool right now because everybody's cooling.
Can I ask you, we've only got 30 seconds left here. Would you invest in a fossil fuel energy company, an oil and gas company?
No.
You wouldn't anymore?
No,
even though there's going to be demand for years.
Some people, look, we need certainly natural gas for a long time.
And I know you're kind of talking your book, because that's not
we need natural gas for a long time.
Okay.
But we personally would not invest. We are fund focused on, we are an Article 9 fund. We invest in things that decarbonize the global economy.
But if you weren't, would you?
If I was a financial investor, I would.
Okay. All right. Love having you come here. Always provocative. I always learn something. Come back soon.
Yeah. Will do.
Hans Kobler, he's founder and managing partner, Energy Impact Partners, here in our studio.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
How long can this go on? That I work it in a coal mine, going down, down, down.
All right. Well, there is definitely working in a coal mine. And if you think about our history, right, not good conditions.
Yeah, and there's also working low-wage retail jobs here in the United States in 2023, Carol.
You mean like at a Dollar General?
That's exactly what I'm talking about.
Yeah, maybe not exactly like working in a coal mine, but yeah, wait until we get into this story because ick. Based on this week's Bloomberg Business Week cover story, it also happens to be today's Bloomberg Big Take. You will find things like rat infestations, blocked fire exits, expired kids' food, machete-wielding and watermelon-throwing shoppers. It sounds funny, but it's really not. A lot of nightmares at the biggest dollar chain, Tim, in the United States.
With more on the story, which is reported out by Bloomberg's Josh Idelson and Brendan Case, let's bring in Brendan, Bloomberg News U.S. retail reporter, joining us on Zoom in our Dallas bureau, along with the editor of Bloomberg Businessweek, Joel Weber, here in our Bloomberg Interactive Brokers studio. The story, by the way, it is in the new issue of Bloomberg Businessweek. It's available on newsstands tomorrow. You can already read it, though, on the Bloomberg terminal and at bloomberg.com/businessweek. One of the most read stories on the Bloomberg terminal today, Joel. This is a deeply reported story with disturbing anecdote after disturbing anecdote. How does something like this come together?
Who knew that a story like this that has really changed what how a lot of Americans shop, I think, had this side to it. And so one of the things that struck me about it is that we've talked, I think, for a generation now about, how big of a presence Walmart has had in America. And it actually is like the story that Walmart sort of, I think, propelled into America for like these big box stores and changing small town America. Dollar General has actually taken a lot of that farther now. The stores have a much, much, much smaller footprint, which we described in the story. The price points are amazingly affordable and seemingly inflation-proof, as we also point out in the story. The cost of all of this, though, is that it turns out to be a really troubling place to work. And the people who actually work in the stores, a retail job, wow, the stuff that they've gone through. So Brendan, Josh Idelson, but was lead writer on this. Brendan Case, also intimately familiar with it. Brendan, what was the reporting tidbit that made you and Josh just really want to dig into this?
There were a couple things, and one of them was what we say at the very beginning of the story, which was that if you look at a lot of the fines that the Labor Department through OSHA has levied against Dollar General, one of the things that keeps coming up over and over again is blocked exits, which obviously matters a lot to OSHA. It harks back to the Triangle Shirtwaist Factory fire in New York. One thing that surprised us was talking with an employee in New Orleans who said that in his case, the blocked exits were no accident. In fact, a manager had told him to purposely block exits to try to cut down on shoplifting, make it harder to get out of the store. That was one thing. Another thing that jumped out was just the lack of heating and air conditioning. And we talked with people who had put ice packs down their pants when it got hot, wore multiple coats and layers when it got cold. And one regional manager who, was fairly high up in the company who told us that she was just really shocked by how difficult it was to get funding for basic maintenance, basic upkeep.
On top of all that, there's this sense that Dollar General has just been in this incredible growth strategy. So talk about how it's kind of swept the country a little bit, Brendan. Yeah,
and it's really amazing how fast it's grown. To your point, it's a little bit sort of a creature of the Walmart era. Walmart comes in and it wipes out a lot of retailers across the country and leaves a landscape that if you're not close to a Walmart or have a easy access to a car, you might not have as many retailers that, as you had before. And so in swoops Dollar General and many of its rivals. and, opens up stores to the tune of typically, 1,000 a year. And so, they've got more than 19,000 locations around the country right now. You compare that with a little more than 5,000 for Walmart, including the Sam's Club locations. And you start to get a sense of how ubiquitous it is, especially in smaller towns. About 80% of its stores are in towns of 20,000 people or fewer. And if you drive through through the countryside in many states, particularly the Southeast, but in many other parts of the country as well, you'll see store after store.
We talked about the block fire exits. Can we also talk about the bat guano? Because there's some of that in the story, Brendan.
Joel's been saying it a lot since he came in the studio.
Yeah, I was waiting to do that transition there. How crazy are some of the reporting details that you found?
Yeah, the issue of animals getting into the stores and befouling the merchandise is something that also came up over and over again. There was one case in Oklahoma where birds got in and used sections of the store as a bathroom, and the store manager there told us that he was told to just take the merchandise home, wash it in your washing machine if you have to, and bring it back and put it back on the shelves. There was another instance in which there was an Iowa store. There was a worry about asbestos, but after inspection, some state inspectors found out that it wasn't asbestos. That was the good news. The bad news was that it was stains from bat feces.
I mean,
this is all over a wall.
It's pages and pages of disturbing anecdotes, of disturbing experiences that employees have had. I mean, one thing that really stuck out to me was the employee who, if there's one employee in the store, the employee asking a customer to watch the store while he or she went to the bathroom. I mean,
crazy.
The thing that I was thinking throughout this piece is that this is working for Dollar General. They're making a calculation that they can allow their stores to reach this condition, pay their employees this wage, have this few of employees in a single store, because it's worked, especially over the past 5 years.
Yeah, it's really worked for a long time. And they've had, from a financial standpoint, a really strong record of sales increases and profit increases. One thing they're good at doing, and this is not true of all retailers, is opening new stores and fairly immediately having them contribute to the bottom line. This year has been a different story for Dollar General, at least from a stock market perspective, where the shares have come way down. They've cut the profit forecast a couple times. One of the big problems, obviously, is just the financial pressures on their customer base, which skews towards the lower income end of the spectrum. They have said, however, that they're going to spend more on labor. And that's at least, that's certainly an acknowledgement that the store conditions are not where they want them, and that they're starting to spend money to try to improve things this year. Another thing that's driving that, I think, is just a stepped up competitive threat. For years, Dollar General was known as, the big successful dollar store chain. Dollar Tree, its closest rival, was sort of an also-ran. That company's in the middle of a turnaround, and so, seems to be becoming a stronger competitor. And then you've got Walmart, which lost some ground to the dollar stores in the wake of the Great Recession, really doesn't want that to happen again if the economy slows down, and is rolling out a lot of initiatives, whether it's, pricing or delivery services that are designed to sort of counter competition on the lower end.
Hey, Brendan, and the stock, as you said, down more than 50% this year, trading at a 52-week low. What does the company say about all of this?
They reported earnings a couple weeks ago and, again, cut their profit forecast. And interestingly, they had initially said they were going to spend an extra $100 million on labor this year. They moved that number up to $150 million last month. So clearly engaging with the idea that for their own customers, their own workers, there are some things that are falling short right now. Whether that's enough remains a big question mark.
But what I mean about all these specific things, I mean, this is pretty gross for workers and unsafe for workers. And, we talked about the New Orleans worker who were blocking, the fire exits, and there was a fire. Unfortunately, nobody was there. But this stuff continues, and I'm curious if the company addressed any of these specifics.
The company told us in a pretty, we sent them a very detailed inquiry. They got back to us with a significant reply that repeated things they've said in the past, which has to do with them saying that they want to provide stores that are safe to work in. They want to provide opportunity for their workers. I think that a lot of the details in the story show the ways in which they've come up short in those goals. The extra investment they're making suggests that, they're sort of acknowledging some of the shortcomings. But again, whether that turns out to be enough to really kind of turn things around, I think the proof will be in the pudding.
And this is in the story, but it really does kind of culminate with a shareholder meeting where employees really did get their attention. So we'll see where that leads. I do think, Brendan, when you just look at the incredible performance that the company has had on the stock market, really until this year, what's happened? Because you would think, like, with the economy being where it is, inflation being where it is, this looks like a pretty good value proposition to an American consumer. And yet, you look at that share price and it's like, the ceiling of bat guano fell apart and everything fell apart. What's happened?
I point to two things, and one of them is tougher competition. I think Dollar Tree brought in a former CEO of Dollar General with backing from an activist investor, Mantle Ridge. Their comparable sales numbers suggest that they're getting some traction there, that people, consumers out there are noticing improvements and responding. That's one thing. Another thing is the whole issue of trade down. In the wake of the financial crisis, you had a lot of trade down from middle income, higher income people doing just what you say, saying, look, that's going to be a great bargain. I'm going to buy more stuff at Dollar General or Dollar Tree or other dollar stores. I think you're seeing a lot less of that right now. And where you're seeing it is in Walmart. And so I think that whether it's competition from small box stores like other dollar stores or competition from the really big ones out there, I think Dollar General is under a lot more pressure than it used to be. Now, at the same time, by its own admission, it has this issue with store conditions. Can it fix the store conditions? Is fixing the store conditions going to be good enough to get back some of that business and get back onto a growth path in terms of comparable sales, store by store? That's an open question.
I just think about, too, that these stores do play a role, that there are small communities around the country, right, that don't have anything.
And as the story also documents, like, some of these communities have actually resisted having Dollar General come in, have lost some of those battles. So there's this tension there. I also just think the moment that we seem to be at with labor in this country, with UAW doing what it's doing, Hollywood doing what it's doing, just to look at retail for a second and be like, oh yeah, there's this world that I don't think we talk about enough at Business Week, but this is, a landscape of what America really looks like, and the people who are on the front lines actually dealing with some of these issues that, you don't expect to have to deal with a machete wielding customer. And yet at Dollar General, that's part of your job description.
Yeah. Even if you don't get training for it.
It's not in the training.
No, it's not. They made that point.
We laugh, but it's disturbing and it's real for some folks. Incredible cover story. Brendan Case, Bloomberg News U.S. retail reporter, and of course the editor of Bloomberg Businessweek magazine, Joel Weber. This is the cover story.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
But it's only me.
Ah, yes, indeed. We did write about real things, but he also told some great tales.
Yeah, he sure did.
We're talking about Tom Wolfe, a contrarian. conversationalist, and an iconic writer.
He's
no
a
doubt about it.
controversialist, too.
Yes, he was.
Yeah.
Focused on status, its dark side, humiliation. His nonfiction works included tales of psychedelic dropping hippies, such as the electric Kool-Aid acid test. You talked about that reading it in high school?
College.
Yeah.
Class on the 60s. Pretty cool class.
Risk-taking astronauts, The Right Stuff, which was made into an incredible movie. We're at the forefront of new journalism, blending literary flair with immersive reporting.
His portrait of the downfall of entitled bond trader Sherman McCoy in The Bonfire of the Vanities, his first novel, came to define an entire era. So writes our next guest, Joe Mysak, editor of Bloomberg Brief Municipal Market. Joe, over the last year, has spent many hours digging through the 236 boxes stacked in the vaults of the New York Public Library's main building, Carol, in Manhattan, the archives of Tom Wolfe.
His story about what he found is featured in the remarks section of the upcoming issue of Bloomberg Businessweek magazine. Kind of reads like its own literary tale. You can read it now at the Bloomberg terminal, of course, and at bloomberg.com/businessweek. Joe is here in our Bloomberg Interactive Broker studio. So talk to us. First of all, I'm just curious, what was the pitch meeting to Joel in doing this? Or did Joel come to you and say, Joe, you got to do this? Or how did this come about?
No, I discovered this, this little episode of literary history. I found a letter in the archives from Tom Wolfe's. Tom Wolfe had been a trustee at St. Christopher's School in Richmond. He'd gone there, graduated in 1947. Right. And there's a letter from the headmaster there saying, I wish you'd give this guy, Kirk Materne, a call. He gave us a very nice bequest. And as you know, we're starting up ramping up our endowment campaign. Okay. So, the archives are spread out on a lot of different boxes, so that it's not perfectly chronological. So you're going through them and saying, here, then this must be connected here. And just like all of a sudden, when I saw this guy's response back to, Tom Wolfe writes him and says, thank you for this. This is wonderful. As you know, we're starting up our endowment. Materne gets back to him and on his Lazard Frere stationery says, wow, thank you so much for your nice letter. And, why don't we have lunch sometime? And, not just us, but I have some friends on the street who'd like to meet you too. And I'm not going to put you on a podium. Let's just have an informal lunch. And he sets up this lunch at the 21 Club. Now shuttered, unfortunately.
Right.
And,
the iconic 21
there's
Club.
a separate letter for that. And, then on one of the other letters, Tom writes or, starts drafting a reply saying, your friends were fascinating, and they clued me into this world that I knew nothing about. Yeah. So I put all this together, and I said, wait a minute, this guy, Kirk Materne, is the guy who was responsible for Sherman McCoy, the protagonist of Bonfire of the Vanities, becoming a Wall Street trader. He had been in the Rolling Stone series, and it went, I think, for about 27
This was the serialized version of Bonfire of the Vanities.
The serialized version of Bonfire. Tom was writing it against deadline all the time. He had been a writer, and the title of his book, and it was never quite defined what it was called A Man in Slices, which of course is funny because Tom Wolfe's third novel is called A Man in Full.
So, Joe, you call him Tom.
Yeah.
Like you know him.
Yeah.
You know
I
him.
did.
How did you find yourself at the New York Public Library looking through
Tom Wolfe's mail
over the last year? And tell us how you came to know him over your career and over his.
Well, okay. I was in search of, there's a couple of lines in Bonfire where Sherman McCoy's daughter asks him, and this is in the published version of the book published, says, Daddy, what do you do? What do you do, Daddy? What do you do all day? And Sherman McCoy starts to fumble around, and finally his wife, Judy, says, I got this. And she says, what Daddy does is he slices the cake. and he hands out slices, and Daddy gets to keep the crumbs. And so Sherman McCoy, is completely humiliated by this, and thinking wow, the crumbs. And at that, they're out in Southampton right then. So I remember I asked Tom one night. We were having dinner at Ben Benson's, also now closed. I asked him, I said, who came up with that? Did you come up with that? And he goes, no, Desmond Fitzgerald. And I remember the name Desmond Fitzgerald, but, last summer, I said, wow, remember that? I bet that'd be a nice column. Let me go to his papers and see if I could find that. Sure, how difficult could it be? Well, very difficult. Because, as I said, 236 boxes. And, you're not just faced with them. You have to request different boxes, and so it's a whole process. So I'm looking, and I didn't find that, but I found Kirk Materne. And so then Kirk Materne's son works on Wall Street. And I said, well, wait a minute, this can't be that Kirk Materne. This is the son. So I emailed him cautiously, and I said, I don't know if your father's still alive, but I'm looking to find out this information and chat with him a bit. And he goes, oh, sure, let me find out if he'd like to chat. He's retired in Florida. And he got back to me and said, yeah, here's his email address. Wow. So then I got to call him up, and I just basically, you're the guy. You're the guy who changed the course of literary history, really. Because if you think about it, on the one hand, if you have, here's a novel about a writer of A Man in Slices, or this entire chaotic scene of what did he put it? Men baying for money on the floor of this Wall Street securities firm. And of course, Bonfire was not a particularly good movie, but the Wall Street scenes really captured people's imagination, because all of a sudden it's like this whole world is shown to you. And, one of the parts of this, project as I was doing it, Kirk Materne set up a meeting to go to Salomon Brothers during the Treasury bond auction so that Tom could just watch it and witness it. And of course, it was this wild thing. And it happened that Michael Lewis was working at Salomon Brothers at that time, had not yet written Liar's Poker, obviously. So that's, that was why I was searching through the papers. And as I was searching through the papers, I became sort of addicted. Because you go through, and in every box, in every box there's a little surprise, like a little present.
I can only imagine.
And okay, for example, Carol, Tom did this anthology called The New Journalism, and there's an introduction basically made up of a couple of pieces he wrote for New York Magazine and for Esquire. But there's all, and what happened was I thought he just took those three parts and cobbled them together. No! Instead, there's this manuscript, hundreds of pages, probably maybe even thousands of pages, because the Tom Wolfe writing was rewriting. And it includes this entire maybe 200 pages of all about his time at Yale in graduate school, which he has never written about before. But there it is in the boxes at the New York Public Library. Tom did not like graduate school at Yale.
I just have this picture of Joe just surrounded by all this stuff. I don't know, maybe some coffee on the ground.
No, that's here. That's here.
Okay. Listen.
Bloomberg Newsroom. And the New York Public Library, you have to be very nice. There's no food allowed.
We're talking with Joe Mysak. Also, of course, in our studios, Joel Weber, editor of Bloomberg Businessweek. And, Joe, we're just listening to Joe just unfold this tale of what he found out and how it led to this most famous fictional bond trader, right? That was in Bonfire of the Vanities.
Do you need me? Because he was doing great.
No, I'm just thinking. we
always need you, Joel. Are you
but
kidding?
we're thinking about like when this was transpiring and Joe's telling you the story and just what you were thinking.
We weren't there for Bloomberg Business Week, Joe, right? Like this is the piece that you wrote is a product of you being there, the research that you did. But Joel, tell us how it came together.
Joe wrote this story. I was like, why do we need to know about Tom Wolfe now? Like, didn't he die? And then I remind
Joe's like, well, wait a minute.
In 2018, there's also a documentary out. Okay.
Yeah, and the documentary was the reason that I was like, there's a reason that this matters now, right? And it's because Michael Lewis went to the same archive and wrote this story, and he happened to write it before Tom Wolfe died. And at the premiere on Friday, he actually said that he wanted to write it so that he could see Tom's reaction to the story. We didn't get that luxury, so we had to deal with it afterward. But I think because Joe had written the story and spent so much time in the archive, and look, in this world, in the Bloomberg world, the Bonfire of the Vanities is a big deal. That it still feels like a foundational thing. And so the fact that Joe found this little nugget that first draft wasn't even really about the bond market, I was like, that is awesome. It's amazing. So that's what matters. It just felt like there's a little bit of history that we were able to provide a significant insight on, and that was 150% Joe. What other archives are you questing to spend time in?
Well,
wait, are we done? Wait, I want to hear about Jackie.
I heard that Gay Talese has quite an archive in the bottom of his house.
So got to sell it to the New York City Public Library so you can get to it, right?
Right.
What else did you find out about Tom Wolfe? Because you did find out more about. He became almost one of the characters that he has written about.
There's so much in the archive that it's an education in certainly journalism history. For example, I came across this piece that he wrote, first that he pitched. He sent a 27-page pitch letter to the Saturday Evening Post, which in 1962 was quite a legitimate magazine.
Right.
And he included this, a pitch for an article about a status life in Washington, D.C., because at that point he was working for the Washington Post. And he sends this pitch letter, and then apparently later on sends the completed story. And there's, 35, 40-page article about status life in Washington and the Kennedy administration. And it was never run in the Saturday Evening Post. It was never run anywhere. So you just keep coming across these little presents, and this wasn't published, isn't this something?
It's unbelievable.
I mean, is there going to be just opportunity for a book of the unpublished works of Tom Wolfe?
I think not only the unpublished, unpublished work, but the uncollected work. So many of his book reviews are really insightful, where he really tells you what he's thinking, including this entire evisceration of Norman Mailer. Incredible.
So
that was an interesting part of was just how much tension there was, and if you're interested at all in this, it's worth checking out this documentary, which in New York is at IFC, called Radical Wolf. So.
Great stuff. You could go on and on. There's more in your story.
You mean that's it?
Sounds like you need to write a book. I'm just telling you. If you got nothing to do, when you have time to spend in the archives, just go write the book. Joe Mysak, of course, and Joel Weber. Check this out. Remarks section of the upcoming new magazine.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, our next guest is an author of many books, including the New York Times bestseller, The Wizard of Lies, Bernie Madoff and the Death of Trust. That book made into an HBO film. It starred Robert De Niro and Michelle Pfeiffer. She also spent more than 20 years at the New York Times, where she was a finalist for the Pulitzer Prize.
Can I tell you, Robert De Niro, for years leading up to with Tribeca, kept asking him, when are you going to do Madoff? When are you going to do Madoff?
And then he did it.
Anyway, go ahead.
She got him to do Madoff.
She did.
Her most recent book is Taming the Street, The Old Guard, The New Deal, and FDR's Fight to Regulate Capitalism. It came out last week. It's an exploration of financial regulation during the New Deal, a period of time that included the creation of the SEC. The Financial Times called the book, quote, riveting and timely, and I've got to agree. We're very pleased to have with us Diana B. Henriquez here in our Bloomberg Interactive Brokers studio. Full disclosure, Diana did give me my first job in business journalism when I was a research assistant on The Wizard of Lies back in graduate school. Diana, welcome. It's good to see you.
He adores you. Can I just say?
Thank you, Tim. You've turned out pretty well. I think my judgment was pretty great.
Well, thanks so much. So Carol and I were talking about this just in the last 3 hours, basically. Like everything we see today reminds us of the Roaring '20s and what was happening.
Isn't it remarkable?
It is remarkable.
Like deja vu all over again, as the old joke does. But, these are our Roaring '20s. And the press to deregulate, to reduce the fetters on unfettered capitalism. Some of the arguments that I see in the press today were lifted from Calvin Coolidge almost word for word, comma for comma. It's amazing how the arguments, the defenses against regulation that emerged in the 20s and 30s have resurfaced today.
But it's not just the arguments against regulation, it's also the concentration of wealth that we're seeing right now.
That's what I thought was striking.
The concentration of wealth, the disparity of wealth, the amount of income growth that is going to the top 1%, the stagnation of average and ordinary workers' incomes, all of that is straight out of the 1920s. We're seeing technologies disrupting major industries, same in the 1920s. Major changes in manufacturing wiped out 3 million jobs at the beginning of the 20s, and 1 million of them never came back. So,
Diana, does it make you, because it's interesting, because we just talked a lot about AI today and the disruption there. Again, I mean, it's kind of a constant narrative. But does it make you say, listen, the world, the economy, the market, business, it's cyclical. We go through these changes. Or does it, I don't know, how do you think about it?
I think the market is always going to be a very sensitive barometer of a disruptive change. And whether that disruptive change is radio, as it was in the 1920s, which was, changing the way newspapers operated, changing the whole landscape of mass communication, or whether it's AI, arriving at a time when finance is already highly automated. But the reliance of the market on the status quo, considering that it makes its money because things change, right? It is amazing to me that everyone thinks it's going to stay the same. And indeed, they did in 1928, 29, right up until October of 1929. They said, this is a perfect world. And for the plutocrats, it was a perfect world, and it's always going to change. And within the next decade, as I detail in that's the stretch of time I cover in Taming the Street, 1929 to 1939, the world turned upside down.
Can I ask how you got there? Like, how did you say, you obviously could write about probably anything and everything. So what is it that said, I got to do this?
Oh, I fell in love with the story of Richard Whitney, the fall of the great New York Stock Exchange president. When I first started covering Wall Street, back in the Pleistocene era.
Stop.
And I said, gosh, what a tale. It had been included in a kind of episodic, anecdotal book called Once in Golconda by John Brooks, which I loved. And I tucked it away, and always thought that period of creation of market regulation would have been fascinating to live through. But what really piqued my interest, Carolyn, was the 2008 meltdown. I was going to work at the New York Times every day in the fall of 2008 after Lehman Brothers closed, wondering if that would be the day the ATMs went dark. And I was aware as an amateur financial historian that I was living through history.
Right.
I was living through events that would be historic in the financial history of the country. And I said, the people going through 1929 felt this way. What an incredible experience they had. So, but that kind of began to crystallize what I wanted to do. Then, of course, Bernie Madoff happened in 2008, and my life went off in a different path. And then the 30th anniversary of the 1987 crash came. Well, that got me closer to 29, because, of course, the 87 crash was the worst day in Wall Street history, eclipsing the worst days of 1929. And finally, when that book was done, I said, I think it's time. So I started work on this book about 5 years ago when no one ever mentioned the New Deal. when it was as if Roosevelt had never existed. But I'm digging into the story and seeing more and more parallels. And then as the last 5 years have unfolded, it is as if the puzzle pieces that matched the 1920s and 30s just dropped into place.
It's pretty shocking.
It was amazing. Yeah.
Well, let's talk about the political environment here in which FDR came into office, because you note in the book that it's, quote, alarming political discontent erupting from the extreme left and the radical right. I thought to myself when I read that,
sounds familiar.
Are you talking about 2021? Are you talking about 2020?
No, I'm talking about 1928, 29, 30, 31, 32. The right, the suffering in this country, first, we can't even take it in today, but 25% of the workforce was out of work. In those days, that was 13 million people. But imagine that 1 out of every 4 people you know doesn't have a job. Many of them haven't had a job in years. People are living in caves in Central Park. They're scavenging landfills. The degree of suffering in the country is reaching such a point that it's a powder keg waiting to explode. From the left, you have increasingly militant communist interests that are eager to harness this worker anger and outrage to make gains in the political system. And that, of course, alarms the industrialists and captains of capitalism on the right, who are fearful of labor uniting with communists, and they start looking longingly at Italy and Germany, which have been under fascist control in Italy's case for more than a decade, and they say, they've got some pretty good ideas over there. Look how they're getting their economy going. Look how they're managing their labor unions, locking them up.
Right.
But so you've got these two tensions, and you've got a man who steps in, FDR, and says, if democracy can't fix this, people are going to give up on democracy. And so this is one last chance for democracy to relieve this suffering and give people hope. And that's what carried him into office.
The ties between capitalism and democracy. Like, it's tortured. It's important, right?
It's actually so simple as FDR saw it. And I didn't see it this way until I read speeches of his. When he signed the bill creating the SEC, he said,
wait, say that again. The bill creating the SEC.
Yeah.
An institution we take for granted.
Yeah. And we take the FDIC for granted. That didn't exist before Roosevelt. I mean, we have lived our entire lives
Hello,
under the
regional
protection.
banking crisis.
Right.
Yes,
Yeah.
exactly. So he saw that a healthy democracy required well-regulated markets that seemed fair.
Yeah.
He believed that if the average American didn't feel he could get a fair shake in the economy, he would not support the democracy. And so to him, the two were completely wedded. And so if I say, a lot of people are saying, democracy's on the ballot in 2024. I'm saying, yeah, financial regulation is on the ballot in 2024 too, because they are inextricably linked. The fairness of the economy in the eyes of the average American is what sustains support for this democratic experiment. And Roosevelt saw that almost break. Wow. There's a anecdote which I love. It's perhaps apocryphal, but I love it anyway. A visitor to the White House right after Roosevelt was sworn in at the depths of the Depression.
Right.
Said, well, if you can cure this depression, Mr. President, you'll be our greatest president. But if you fail, you'll be our worst president. And Roosevelt corrected him. He said, no, if I fail, I'll be our last president. Yeah. To the perspective of the people at the time, it was that desperate.
That's journalist and author Diana B. Henriquez. Her latest book is out now. It's called Taming the Street: The Old Guard, the New Deal, and FDR's Fight to Regulate American Capitalism.
You're listening to Bloomberg Business Week. We just talked regulation on Wall Street. Well, coming up next, we'll turn to another hot-button policy issue, controlling our southern border.
Chef John Fraser discusses what immigration flows mean for America's hospitality labor force. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Well, Jess, I love having restaurateurs on our program because, well, I love food, and sometimes if they're here in person, they bring us food, and I can try it. It's really fun. But also, I love speaking to them about the business, how much food costs, how tough or how easy it is to get employees, and of course, customer demand. It can tell us just a lot about how the economy is doing in different parts of the country. Very pleased to have with us this afternoon John Fraser. He's a restaurateur, a Michelin-starred chef. He's the founder of JF Restaurants. They've got 15 restaurants with more than 400 employees around New York City, Long Island. They're in California and LA. They've got places in Florida as well. He's also got a YouTube series called Silent Chef, which we're going to talk about as well. Chef John Fraser joins us on Zoom from New York City. Chef, how are you?
Great. Thank you. Thanks for having me.
Yeah, it's really good to have you with us. First, just give us a update on the state of the business. What are you seeing right now across your different restaurants and concepts?
Yeah, it's really city by city. New York City, as everyone knows, kind of is a really seasonal business. Our New York City restaurants were up from last summer for sure. We'll know in a couple of days kind of how much. But we do see a bit of a lull always in the second, heading into the third quarter, and then we ramp up into the fourth, which is by far our best. Around Florida, also, seasonal dips happen in the summertime, and we're seeing really, really strong demand across the hotel properties. Out in Long Island, as you know, that's where it all happens in the summertime. It's a seasonal business, and we've been rocking. We'll probably go until around the end of October, and then we'll settle into the winter months.
Well, what about getting employees? If we were to speak to you 2 years ago, I know you would have said it's tough to find employees to work in the restaurants. Tell us about how tough it is to get those employees. And then also tell us about food costs and if they're going down.
Yeah. Starting with food costs, I mean, we have seen a drastic decrease in our food costs as the supply chain has gotten better. Thankfully, we're able to pass that along to our guests, and we're seeing that across all of our restaurants in all of our markets. The food cost hikes were kind of universal. It didn't matter market to market. Eggs were still, wildly expensive. Gas was wildly expensive, and that was all passed on to us and therefore our guests. So from a food cost perspective, we're seeing things drastically reduce. There still are some pockets. I would say a lot of proteins like beef still very, very high. I'm not sure that's ever going to get better, to be honest with you. It may just be a change in the way that we construct our menus and the way that our guests actually eat. From a labor perspective, we are starting to see some uptick. We've hired on, let's call rehired a lot of people that were pre-pandemic hospitality employees. So in other words, we're bringing folks in who have had experience in the past, whereas I would say in the last couple of years, we were training from zero, which is fantastic for us. And I think that guest experience is drastically improved in that way. I still think that we, hot topic, when we figure out a sensible kind of reaction to our borders, that will be kind of the last domino for us to fall in order to equalize and be able to pass that savings on to our guests.
So in your view, do you really think the economy is slowing?
In my view, well, compared to what, right? Compared to a year ago, we're drastically up from last year. Compared to 2 years ago, obviously. What I would say is what we're seeing is a sort of bifurcation of spending. We'll have some folks that join us who, let's say, are not big spenders. They're out for an experience. And then we'll have some folks who are clearly out to party and have a great time and who will have a drastic spend. So what I would say is I'm starting to see a split of sort of people that are willing to kind of separate with those dollars and people that are remaining sort of tight. But we have not seen a drop in reservations, which for us is kind of the tell.
Hey, go back to, Chef, what you were saying about immigration and border policy here and connect that to what you see at the restaurants.
Well, I can only speak from my experience, and it's anecdotal, right? I'm not coming from a place of data, but I can tell you who our applicants are, and I can tell you where they're from. What we used to have is quite a bit of Latino applicants, especially in the back of house, and that has changed. We are now not employing as many, and a lot of those that we are employing are first-time hospitality employees. So I'm not sure if there was a move around the United States and move back home to their home countries. But I can tell you that the hospitality workforce is severely understaffed, and that would make up a huge chunk for us. It has to be sensible, but it has to be soon. And that would probably mark a drastic change in your guest experience, it being better, and the price that we have to charge.
That's so interesting to hear, and because I think that part of the conversation often gets lost when we talk about immigration policy, because it's so polarizing when you have Democrats and Republicans fighting about it. And it actually sounds very clear from you. I'm wondering if you do any work in telling your local legislators about this, if you've partnered with any other restaurants to talk about this, because there are serious economic implications here.
It is polarizing, and I think that I'm a small business owner, and I'm not coming at it from a political point of view. It's simply spaces that we need filled. We do some work with our local folks in each one of our markets. We do a lot of work also in some of the training and onboarding of folks. Unfortunately, the hospitality industry is it is the largest employer in America, but our voice is not quite as unified as I think it probably could be nationally. And that could just be, a difference between states and also competition in between, small businesses.
Talk to us about your YouTube series.
Thank you. So, during COVID, for the first time, I had some free time in probably 20 years, and I was looking around the media landscape of on the food scene, what's happening, and what I was finding is a lot of what was out there didn't speak to me. It was a lot of sort of how-to, a lot of a lack of why cook this way, or why this produce, and I felt like that storytelling, it's inside of me. It's how we run our restaurants. It's how we construct our menus and our concepts. But I didn't see it in the media, and so I wrote some short stories, and I was lucky enough to get linked up with Jose Andres Media, who was a co-producer and produced these pieces. It's storytelling in the very simplest way. There's no talking. There's some music and ambient, and it's sort of the chef's journey. The chef's journey is about community, and it's about bringing people around a table. And I'm lucky enough to be able to be connected with these incredible farmers and fishers and winemakers and cheesemongers. And I really wanted to tell their story, but in a way that was perhaps not loud and bombastic and in your face, but a little bit more subdued. It was about connectivity and mindfulness.
How do you do this in a way that without talking?
I think the visual is quite impactful. We really spent a lot of time thinking about the best way to tell a story without words. And hopefully what that does is it brings the viewer in and they fill in the story. I would throw the question back to you. Have you ever made a recipe off of something that you saw on television?
I have, yeah, but it always requires me to go back and Google it, because it's just the way my brain works. Inspired by it,
Right. And I think that's kind of what this series is supposed to do. It's supposed to inspire you to lean into where did those tomatoes come from and how are they being used? Not necessarily how to treat the tomato and cut 1 inch and that sort of thing, because I frankly find it quite boring. I want to know where the tomato comes from and what was the life cycle of the tomato, not necessarily 1 inch or 2 inches. I find that actually most people would say no to that answer, that they don't cook from what they see on television. It's entertainment. And the style of entertainment that we're hoping to bring here with our partnership with Calm is one of mindfulness and connectivity.
Yeah, once I get my cooking gas back on, I will definitely be doing this. I'm curious how you pick a particular food for each segment.
Right. So what this series does is it focuses on a very small radius of locality. So within a couple of miles in Long Island, there's a small town called Southold. And inside of that, there's a biodynamic farm called KK. There is an oyster fishery called Little Ram. And there's a cheesemonger called Captapano. And what I really wanted to do is sort of bring you into this place. It's very special and near dear to me, and show you kind of what happens within a very small radius in a very intense kind of time as well. Summer of 1 year ago, basically, summer of 2022.
Hey, John, before we let you go, I am not very good in the kitchen, I got to be honest. However, I loved The Bear, and I'm wondering if the popularity around the FX series The Bear has led to an increase in people just wondering what happens in the kitchen.
I think I think there's a lot of conversation around also not only sort of the personality of a cook or what happened during a service. So it's beyond the kind of recipes and sort of the action, but also the kind of the people that are producing those things and the kind of pressures that they're in.
Right.
I'm thankful for that story to be out there because I think it's one needed to be told. But also when you've got like a good looking dude cooking and screaming and yelling, there's like great inspiration that hopefully will come to more folks joining us in hospitality.
John Fraser, a restaurateur and chef. He's the founder of JF Restaurants. We love it when you join us. Thanks so much.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.